Hi, friends. Welcome back to the Geeky Trader YouTube channel. I'm super excited to have you here today for another live trading session where we dive deep into the markets and make smart, calculated trades together. In today's session, I'll walk you through one of my favorite simple strategies that uses the Stochastic RSI, an incredibly powerful tool for spotting potential reversals in the market. I'll show you exactly how I use it to identify high probability entry points, time my trades with precision, and lock in profits with ease. Whether you're a beginner just getting started or an experienced trader looking to sharpen your edge, this strategy is straightforward, effective, and easy to follow. Watch how we turned clear reversal signals into profitable trades, all live in real time. Let's get into it. Let's jump into the setup now. This part is super important because it helps us build a clean and powerful chart layout to spot reversals like a pro. So first things first, go to the indicators section. In the list that appears, search for Stochastic RSI and go ahead and add it to your chart. Now that we've added it, let's fine-tune the settings to make it work perfectly for our strategy. Under the Inputs tab, change the stochastic length to 50. Also, set the Stochastic RSI length to 50. Now switch over to the Style tab and uncheck the box for Cent D. We don't need the second line for this strategy. Once you do that, you'll notice that only one smooth blue line remains on the chart, nice and clean. This is the line we'll be using to detect possible market reversals. Now let's add another indicator to enhance the signals even further. It's called the triple EMA, or TEMA for short. Once you add it to your chart, it will appear in its own panel by default. But we want it to sit together with our stochastic RSI for easy comparison. So go ahead and drag the TEMA indicator into the same panel where the stochastic RSI is displayed. It's a simple click and drag. Next, open the settings for the TEMA. Change the color to yellow so it stands out clearly against the blue stochastic RSI line. Make sure the length is set to 9. That's the value we'll be using. No need to change it. And one final step to make your chart neat and readable. Enable the auto option, usually at the bottom right of the panel or in the settings, which automatically adjusts the view to fit your data perfectly on the screen. And there you have it, a clean, focused setup with the stochastic RSI and TEMA working together to give us clear reversal signals. This combo is simple, effective, and easy to follow, exactly how trading should be. Now that the setup is ready, let's dive into how to read the signals and make confident entries. Let's go. So here's the basic idea. We're using two lines, the blue line from the stochastic RSI and the yellow line from the TEMA indicator, to understand the direction of the market. When you see the blue line moving below the yellow line, that's a clear sign that the market is in a downtrend. It means sellers are in control and the price is likely heading lower. So this is where we look for possible short trade opportunities or prepare to exit long trades. On the other hand, when the blue line crosses above the yellow line, it tells us that the market is gaining bullish strength. Buyers are stepping in and the price is starting to push higher. This is our chance to look for long trades or hold on to positions expecting more upward momentum. It's just like a simple visual cue. Think of the blue line as the signal and the yellow line as the confirmation. When blue leads the way upward, the trend is likely up. When it dips below yellow, the market might be going down. That's it. No complicated math, no confusing setups, just clean, visual confirmation of trend direction using two smooth lines. Now, let's look at some real chart examples so you can see this in action and get comfortable using it in live trading. According to the setup we've just built, here's what we're looking for. Whenever the blue line, that's our stochastic RSI signal, is above the yellow line, which is the triple EMA TEMA, it gives us a strong indication to look for a buy position. This crossover tells us that the momentum is shifting in favor of the bulls and the price may start moving upward. Now, looking at the current chart, I can see something really interesting happening. The market is currently in the oversold zone. That means the price has been pushed down quite a bit, and there's a good chance that buyers may step in to reverse the move. And guess what? Our blue line is now crossing above the yellow line right in this oversold zone. This is exactly the kind of signal we've been waiting for. So based on this confirmation, I'm going to enter a long position right here. It's a textbook setup, clear crossover, strong zone, and great potential for a bounce. Let's place the trade and see how it plays out. All right, friends, now let's talk about the exit, because knowing when to get out is just as important as knowing when to get in. According to this strategy, I like to stay in the trade as long as the blue line stays above the yellow line. That tells me the bullish momentum is still intact. And I also keep an eye on the stochastic RSI level to see where the market is in terms of buying pressure. So here's the rule I follow. I stay in the trade until the market reaches the overbought zone. That's usually around the 80 level on the stochastic RSI, and the blue line crosses below the yellow line. When both of these things happen, it's a strong signal that the uptrend might be losing strength and a reversal could be coming. And if you look at the chart right now, you'll notice something important. The market has entered the overbought zone, and the blue line is now crossing below the yellow line. This is a clear exit signal for me, so I'm going to close this trade right here and lock in the profits. It's that simple. No second guessing, just following the rules of the strategy. We got in with confirmation, stayed patient through the trend, and exited with another confirmation. All right, friends. Now let's get ready for the next trade. This time, I'm looking to take a sell position, and let me explain exactly why. If you take a close look at the chart, you'll notice that the market has moved into the overbought zone. This is usually a sign that the price has gone up quite a bit and could be ready to come down. And just like we discussed earlier, the key confirmation comes from our indicators. The blue line from the stochastic RSI has now crossed below the yellow TEMA line. That's our signal that the bullish momentum is fading and the sellers might start taking control. This crossover, combined with the market being in the overbought zone, gives us a strong setup for a short trade. So based on this clear confirmation, I'm going to enter a short position right here. It's a great example of how we can patiently wait for our setup and then take action with confidence when everything aligns. Let's place this trade and see how it plays out. And of course, we'll keep managing it using the same simple rules we've been following. All right, friends. Now let's talk about how I plan to exit this short trade. And again, it's super simple and rule-based. Just like we followed a clear setup for entering the trade, we're going to use the same indicators to decide when to exit. Here's the rule. I will stay in the trade as long as the market keeps trending downward, which we know is happening when the blue line stays below the yellow line. But the moment we reach the oversold zone, which means the price has dropped quite a bit, and the blue line crosses back above the yellow line, that's a strong signal that the downtrend might be ending and a reversal could be around the corner. And if you look at the chart right now, both conditions are clearly met. The market has entered the oversold zone and the blue line has crossed above the yellow line. That's my signal to exit the trade and book the profits. No emotions, no guessing, just following the strategy step by step. This is the beauty of having a reliable system. It tells us not only when to enter, but also exactly when to get out, so we can lock in our gains and avoid unnecessary risks. All right, friends, let's move on to our final trade for today's session. And this one looks like a solid setup for a buy position. Here's why I'm entering this trade. The market has entered the oversold zone, which usually means it's been pushed down quite a bit and is likely to reverse soon. It's like a stretched rubber band. The price often snaps back when it goes too far. On top of that, our trusted indicators are confirming the reversal. The blue stochastic RSI line has crossed above the yellow TEMA line, which is a strong signal that bullish momentum is kicking in. So based on these confirmations, I've entered a long trade right here. And as always, I stay patient and let the setup play out, sticking to the rules we've been following throughout the session. Now, fast forward to a little later, and look at this. The market has now reached the overbought zone, and the blue line has crossed below the yellow line. That's my cue to exit the trade and book the profits. It's a clean textbook trade, entered with confirmation, managed with discipline, and exited with confidence. And with that, we wrap up this live trading session. I hope you enjoyed learning this simple but powerful strategy using the Stochastic RSI and TEMA. As you saw, it helps you spot clean reversals and make smart rule-based trading decisions without any confusion. If you found this helpful, please give it a thumbs up, subscribe to the channel, and share it with your trading friends. Your support means the world and helps me keep bringing more real strategies and live sessions just like this. Thanks for watching, and I'll see you in the next video. Until then, stay smart, stay disciplined, and happy trading.